Today, we're taking a look at the intricate world of international business structures, focusing on the roles of nominee directors, factual directors, and fiduciaries. These terms often come up when establishing businesses across borders, but they can be quite misunderstood. Let's break them down and explore how they impact your international ventures. When you form a company, it's essential to understand the key positions that make up its structure. A company operates as a separate legal entity, which means it can face lawsuits, maintain credit, file tax returns, and pay taxes independently, often at lower rates than individuals. The main participants in this structure include shareholders, directors, executives, management, and employees. Shareholders are the owners of the company, while directors hold the legal responsibility for maintaining the business and making high-level decisions. These roles don't necessarily overlap. In fact, in many international setups, you might find yourself as a shareholder without any directorship responsibilities. An important aspect to consider is where your company is managed from, as this determines your tax obligations. If your business management is based in countries like the UK, Canada, Australia, or Germany, your company becomes a tax resident there. This means all your income will be taxed in those locations, regardless of where your business is registered. Simply registering in zero-tax jurisdictions like the British Virgin Islands or the Cayman Islands won't automatically eliminate your tax obligations. Modern tax authorities use sophisticated rules, known as controlled foreign corporation rules, to prevent basic tax avoidance strategies. Now let's talk about nominee directors. A nominee director is different from a factual director in that their role is more about lending their name and passport copies for registration purposes, primarily to maintain privacy. Courts look beyond these paper designations and focus on the actual roles and responsibilities. Nominee agreements usually include clauses that protect the nominee while limiting their control, ensuring that the business owner retains authority over company operations. However, the landscape has changed, especially with modern banking requirements. While nominee structures once offered significant privacy benefits, financial institutions today view them with increasing skepticism, making it more challenging to open bank accounts. Establishing quality banking relationships is crucial for international business operations, and balancing privacy needs with banking access has become more complex. Additionally, public records requirements in many jurisdictions have reduced the effectiveness of nominee arrangements in maintaining privacy. On the other hand, factual directors actively manage the company's affairs. For businesses aiming to optimize their tax situation, having the right directorship structure is vital. For instance, if a UK resident sets up a company in the Isle of Man without a proper structure, UK tax authorities may consider the business as UK resident for tax purposes. To navigate this, businesses can hire employees in favorable jurisdictions, engage corporate fiduciaries, or establish a management presence outside high-tax locations. Corporate fiduciary services play a significant role here. These professional companies specialize in providing directorship services, conducting board meetings, reviewing performance, ensuring proper administration, and handling compliance matters. The costs for these services can range from $10,000 to $50,000 annually, depending on the scope of services provided. By working with fiduciary companies, businesses can establish genuine management control in their chosen jurisdictions, adhering to different countries' varying standards for what constitutes proper management control. Choosing the right structure for your international business depends on your specific needs. If your priority is privacy, nominee directors might be beneficial. However, if your goal is tax optimization, factual directors are likely the better choice. When making this decision, it's important to consider your overall tax strategy, banking requirements, privacy needs, the cost-benefit analysis, control mechanisms, and decision-making processes. Given the complexity of international structures, professional guidance is invaluable. Experienced advisors can help you navigate the myriad of requirements while aligning with your business objectives. They assess your unique situation and recommend solutions that balance various factors, ensuring that your international setup is not only compliant, but also optimized for success. As global tax systems continue to evolve, understanding the different directorship options becomes increasingly important. Whether you're seeking privacy, tax efficiency, or a combination of both, having the right structure in place is essential. Professional guidance can help you manage these complexities, maintain compliance, and achieve your business goals. If you're looking to establish an international business structure, Mundo is here to help. We specialize in designing optimal offshore structures, helping you decide where best to incorporate and whether to use nominee directors or not. Book a call with Liberty Mundo using the link in the description to get started immediately. Thank you for watching. If you found this video helpful, make sure to like, subscribe, and hit the bell icon for more insights on international business strategies. See you in the next one.